Hi there, traders. This is Brad Gilbert with today's trading action. All right, now I think things are looking up. And what I mean by that is not the dollar up, but we are starting to see finally the markets have probably had enough of this US dollar rally, right? There's quite a few of them that have stalled. They're coming back towards key sort of pivot points, and we might start to see a correction. Now, this geopolitical event, trading and the whole trading community will become desensitized to it very quickly, right? Another day or two, and they will forget it even happened, right? And that should see the dollar start to fall again. Now, we did have the strong non-farm payrolls. Yeah, sure. But that's a little blip on the radar compared to the big dollar rally we've seen on the back of that geopolitical event in the Middle East. Now, sometimes there can be one key event, which is the catalyst for a change. And I left the news alert up the top here, up on purpose. Samsung Electronics estimates a 274% jump in Q3 operating profit. Now, that's crazy numbers, right? It has seen the Chinese stock market rally 8% on early trade, right? So that's really giving the markets a shot in the arm. And you'll be able to sort of see, if I just come back to the risk on, risk off page, you can start to see where things are connecting, right? Now, this is an event in the Asian market. So you can check out the rally here. It's almost obscene, right? And this is on the back of a lot of the equity markets themselves going down. So it sort of puts the cat amongst the pigeons. If anything, it sort of discombobulates the equity futures markets, which usually follow each other, right? If US equity futures are down, so are the Asian equities and then the European equities. But we are seeing that sort of debunked a bit with those Samsung estimates. It's sort of blown things out somewhat. Now, just coming back to those to the hourly charts, right? Everything looks overextended at this point. Now, there is no end to the civil unrest, if you want to call it that, in the Middle East. That's ongoing, but the markets, as I said, will start turning away from it and start focusing on, the real fundamentals. And where can you see those? Well, if you come back to your daily charts, I think we're starting to see like Euro's coming back to its key level, and it's overdone. We're starting to see the long-term trends about to stick their head up and start saying that's enough, right? The dollar, you're going down. And that's what I'm sort of starting to feel at the moment. Great time for some key economic numbers. Do we have them? Unfortunately not, right? So that's the unfortunate thing. All we have is dribs and drabs at the moment to keep an eye on. Industrial production numbers out of Europe, neither here nor there. Trade balance figures out of Canada, not usually that important. We've got some bond auctions. If I just sort of scroll down a bit further. Okay, crude, anything to do with crude at the moment. Obviously, Hurricane Milton is about to sort of come crashing into Florida. And if you have a look at the charts, which I forgot to sort of highlight, if you're looking at what is a trading instrument, there's oil, right? It's rallied from like 66 and a half bucks. Not quite at 80 bucks, but we're not far off it, right? And this is the hurricane. A lot of oil rigs shut down in the Gulf of Mexico, and it's yet to be seen what happens when this hurricane hits landfall, right? So it's looks pretty treacherous. That could have ramifications for, won't be a dollar sell. It might be just a blimp on the radar, and it could lead to a huge amount of development down there. And that's growth, economic growth, and that could be a dollar plus again, right? It's like a 1, 2, 3 geopolitics supporting the dollar on that safe haven trade. Then we've got strong non-farm payrolls, and now we're having a potential natural disaster. So it's hard to keep up sometimes with what's going on. All you can do is keep an eye on what's happening in the market, right? Keep an eye on the news services. Obviously, the China markets, that's going to get a lot of write-ups. The dollar holds on the 7-week highs as traders consider US rate outlook. Now, the Fed are cutting next month and next meeting, right? So that's not going to change. That's just a story to sort of fill the gaps, in my view, because you know what? There's nothing really new happening. And I'm actually surprised that the hurricane hasn't got a bit more sort of news to it, because there's no other general news except the bad news in the Middle East. Okay, of course, we've got the Chinese market going a little bit bonkers, the equity markets. And the major currency pairs and instruments are in places where they probably shouldn't be, right? And this is confusing for not just retail traders, but for professional traders alike. So when you come back to the market, if you're not sure what's going on, get up your Metastock templates here and really piece it together, right? US Treasury yields are up, right? Equities should be down. Now they are down, except obviously, as I said, the Chinese stock market. Do we have a risk on day or risk off? Well, it's a bit upside down, right? Because Euro, Sterling, Aussie, Kiwi are going up and the dollar's going down. So we have got a little bit of market discombobulation here at the moment. Okay, it's funny well, it's odd to see the US dollar going down when the interest rate yields are going up. Make of it what you will. It's a little bit kooky, and we'll see what's going on from here. Like the risk on profile is in play, but it's not in the equity markets, right? Bit of discombobulation to me. I still think the markets are about to top out. I'd like to see a bit more confirmation before I jump in, but that's where we're getting to. All right, so not an awesome update, but hopefully it sort of keeps you in track. If you're not sure what's going on, well, join the queue. I tell you what, just having a look at that, and I'm always looking for things that stick out like a sore thumb. I'll tell you what, we get a bit of positive news here or negative news for the dollar. This Kiwi trend line here looks pretty good, right? It is straight down. It's just sort of challenging here at the moment, a little bit overbought, but that's what you should be looking for, right? Go through your technicals and you'll start seeing that like the move here, the strong dollar move is massively over exaggerated. And everyone will be flooding back to the weak dollar trade as soon as we start to see weak numbers or this geopolitical event in the Middle East subsides, or you know what, if it continues, the market will forget about it and just start selling dollars anyway. So we're not far away from getting the dollar going down. It's just a matter of getting the timing right. Is the Asian market right for it? I don't know, because we've got that random Samsung share expectations blowing out the equity markets for the moment. So we'll have to wait and see as we go through that European session. All right, guys, all the best. Cheerio.